committee decided to maintain the current monetary policy stance and hold all policy parameters constant.
This aligned closely with the expectations of many economists, financial market analysts, and investment bankers in several polls. However, those who hoped for a cut seemed to have compelling arguments.
It's always been a balancing act, and we're sacrificing growth, on the altar of keeping inflation in check. Rates coming down is imperative for borrowers. We have to remember the overarching context of Nigerian lives, and we need to push growth so that people can come out of this. The cost of living crisis is right there. It's staring us in the face, and it's not gone away.
Given the tight policy stance of major central banks, many advocates for holding rates warn that any deviation could trigger capital flight from Nigeria. Still, they stress the urgent need to tackle structural inefficiencies in the economy.
There's a need for the fiscal side to match up this energy. There's a need to make sure there's proper and adequate infrastructure, roads, security in food-producing areas, which is a major driver of food inflation.
Now, we need to actually improve production if we want to increase our FX generating capacity. As we speak currently, oil still remains one of the highest contributors to our FX generating revenue. As we speak, the contribution is close to about 80%, if not more than that currently. So we need to actually further deepen what is happening in that sector. And as much as we're looking at that, we are not supposed to take our eyes away from what is happening in the mining sector. And I think that should be more like the new babies on the block, because the government is not actually enjoying or actually sweating.
The Monetary Policy Committee did not only maintain all parameters in its 301st meeting, but it also promised to maintain same until risks to inflation recede sufficiently. This leaves one with the question, when will that be? In Lagos for News Central, I am Perpetua Fasanmi-Peter.